What's up, fellow investors? My name is Matt. In this video, we're going to be looking at one of the FANG names, Facebook, ticker symbol FB. On this channel, it's my goal to log my journey to financial freedom by sharing my portfolio and how I'm doing this through disciplined saving and smart investing. Please remember to leave a like and subscribe if you enjoyed this video. These videos take a long time to put together and it really helps support my channel. Now, Facebook is a stock that I own in my personal portfolio, and Facebook is coming out with earnings next week. So it's important for us to dive into the numbers and see if Facebook stock is still a smart investment. So Facebook is a massive company that has a global presence. It's still shy of $1 trillion market cap because at its current price of around $300 a share, that puts Facebook's market cap at about $850 billion. Now at Facebook's current price per share of about $300, that makes its valuation seem fairly high because it puts its price to earnings between 29 and 30. And this is because Facebook is a company that has posted very impressive growth numbers in the past and continues to show signs that it's going to continue very good growth going forward. And it's our job as an investor to determine if this high multiple is still worth paying. And to help us determine that, let's look into Facebook's operation numbers and any numbers related to the income statement. So this is a graph of Facebook's revenue growth over the last 5 years, and let's look at the products that are included in this revenue. The first two products almost everybody should be familiar with. It's going to be Facebook and Instagram. These are basically two of the most successful social media platforms ever launched because not only do they have a massive amount of users and engagement on the platform, but they're really good at providing a tremendous amount of value to the advertisers that use them because of their ability to reach a very specific target audience. And that really helps give the advertisers a very good return on investment or ROI for money that they choose to spend to advertise on the platform. So when we look at Facebook's revenue, most of its revenue is going to come from advertising on these two social media platforms. The next products, WhatsApp and Oculus, are both very popular, but they're not very well monetized right now, so they don't contribute a lot to its top line growth. But WhatsApp is a really popular app for businesses and people to communicate, especially internationally. And Oculus is Facebook's virtual reality play that it really started to invest more heavily in more recently over the past couple years. But looking at the stock's revenue, from 2016 to 2020, Facebook grew its revenue from $27.6 billion to $85.9 billion. That is really incredible growth over a 5-year period. That comes out to a compounded annual growth rate of about 32.8% for its total top line growth. Facebook is a company that's starting to slow down on its growth as we don't expect it to grow at 32% year-over-year growth forever. In 2019, it grew at 26.6%, and 2020 it grew by 21.6%. But this is still very impressive for a company of Facebook's size. And as we get into the numbers, we can see if it's expected to continue between this 20 to 25% growth rate going forward, or if we expect it to taper off more. But what's interesting about Facebook is if we look at its revenue growth in each of the regions that it does business with, that's going to be US and Canada, Europe, Asia Pacific, and the rest of the world. This is how they divide it up on their annual report, that it's grown by over a 30% compounded annual growth rate in every single region. And Facebook has a very different strategy for growth in each of these regions. And two of the most important operating numbers for us to look into that are going to give us insight into how it does this is going to be its numbers on its active users and average revenue per user. So this is some of the data Facebook has reported on its daily and monthly active users. And to clarify, this is actually the social media platform Facebook, not the entire company. I pulled these numbers from the last annual report, so it goes back 9 quarters, so we have 2 years of year-over-year comparisons. It goes back to Q4 2018 to Q4 2020. Facebook has had very consistent growth in every single region that it's in over the past 2 years. And as we can see in Facebook's last quarter, Q4 2020, it reported having 1.8 billion daily active users and 2.7, just under 2.8 billion monthly active users. And below the monthly active users for each quarter, I put the users split out by geography. And it's interesting to see the number of users and the growth in the different regions because in more saturated markets like the US, Canada, and Europe, growth was much lower. But in Asia and the rest of the world, it's really growing much faster when you look at its daily and monthly active user metrics. And if we look at Facebook's user growth from 2019 and 2020, there's very strong growth in both years. In 2019, Facebook grew its daily active and monthly active users by 9 and 8% respectively. But as we can see, most of the growth is coming from Asia Pacific and the rest of the world in both years. In 2019, it only grew users by 2 and 3% in US, Canada, and Europe, but 10 and 9% in Asia Pacific and the rest of the world. And in 2020, its growth ticked up even higher than 2019 for its users, most likely due to COVID and more people being stuck at home and using their devices. But still, most of the growth is coming from Asia Pacific and the rest of the world. And as an investor, this is good to know because we know it's getting saturated in some markets, but it's continuing to show market penetration in economies that are likely to grow much faster on a GDP basis than the US, Canada, and Europe. And this is a slide that has Facebook's average revenue per user, which is probably the most important metric to keep track of as an investor in this company because this metric is driven by user engagement, which is really important because as people spend more time on the apps, they're going to be shown more ads, and also the price per ad or price per impression for what advertisers are willing to pay. And so this is a graph of the average revenue per user going back 9 quarters. So we have the 2 years of year-over-year comparisons. So in Q4 2018, Facebook's total average revenue per user was $7.37 per user. And in Q4 2020, that has come all the way up to $10.14 per user. First of all, it's incredibly impressive that Facebook is growing its user base and its average revenue per user by these percentages. But what's interesting is if we look at the different geographies, not all users are going to fetch the same revenue per user, and there's a really wide range. Because if we look at the US and Canada, each user is bringing in about $53.56 per user, which is by far the highest. Next is Europe, where each user is fetching $16.87, and then following is Asia Pacific at $4.05 per user, and the rest of the world at $2.77 per user. And this really helps put the full story together for Facebook's growth because in the more saturated markets like US, Canada, and Europe, we're seeing a huge growth in the average revenue per user, which is really driving the revenue growth in those regions. While in the Asia Pacific and the rest of the world, it's really being driven by the user growth. And if we look at the average revenue per user growth over the last 2 years, Facebook grew its average revenue by 16 and 19% in 2019 and 2020. But what's interesting is in 2019, if we look at the different geographies, all the growth were pretty close to one another. But in 2020, there was a bigger separation between the US, Canada, and Europe compared to the Asia Pacific and the rest of the world. And COVID is said to have expedited a lot of the technological adoption and digitalization in the US economy. And I think that this is proof that the demand for social media marketing is likely to get stronger going forward because it is very effective. It's probably not going to have the same amount of growth that it had in COVID going forward, but I do think this is a trend that's going to continue. And while the US, Canada, and Europe had very strong growth in its average revenue per user, Asia Pacific and the rest of the world kind of struggled in this metric. And I think this is due to 2 reasons. One is, you had an explosive amount of new users on the platform, which just introduces a large amount of supply for new impressions, especially if each of those users has a higher engagement. And while a lot of people saw the recovery coming quicker in the US, Canada, and Europe, a lot of the other economies in Asia Pacific and the rest of the world are likely to lag in this recovery. And I think this might have slightly affected the amount of marketing dollars available to pursue these ads. All right, now let's look at how much is Facebook actually making when it comes to its operating income over the last 5 years. Facebook has had very good growth when it comes to its operating income. In 2016, its operating income was $12.4 billion, and now in 2020, it reported operating income for the year to be $32.6 billion. That's pretty incredible, and it comes out to a compounded annual growth rate of 27.3%. So from 2016 to 2020, it came fairly close to basically tripling its operating income. And a special note for 2019, I added $5 billion to operating income as a one time adjustment because that was when it paid or it recorded the fee that it paid for the Cambridge Analytica fiasco. That was a $5 billion fee, so it's an adjusted operating income number for that year. And now, if we look at the operating margin for Facebook, it's also very good, but it's decreasing because in 2016, its operating margin started at 45%, and now in 2020, it's decreased to 38%. And this has been discussed in the annual reports, and it's due to about two reasons. This decrease is mostly due to its newer investments in platforms like VR, Oculus, and also like WhatsApp, which are platforms that are very popular and they're eating up a lot of costs, but they haven't been monetized yet. And the second reason is also due to increased spend, basically to deal with regulation and compliance. But overall, these are still very impressive operating income numbers and margins. So Facebook has had a very strong history of growing its revenue, improving its user metrics, and translating that into income or profit. But whenever we're analyzing a company, it's always important for us to also look at the balance sheet and cash flow statements to get a full picture of the financial health of a company. All right, so this is Facebook's balance sheet that it filed with its last 10K. So this is for its 2020, fiscal year 2020 results. And starting looking at Facebook's total current assets of $75.6 billion, that is very good compared to its total current liabilities of $14.98 billion. And if we look under its current assets, it has about $17.5 billion in cash and cash equivalents and $44.4 billion in marketable securities, which are probably safe investments like bonds. And it also has about $11 billion when it comes to its account receivables. So Facebook is very well capitalized when looking at any of its short-term or long-term liabilities because it only even has $31 billion in its total liabilities, and its total stockholders' equity is about $128 billion. This is mostly driven by its retained earnings. Its retained earnings increased from $55.6 to $77 billion, and a little bit higher in its additional paid-in capital, going from $45.8 billion to $50 billion. This is probably due to its share compensation, but overall, Facebook has a very good balance sheet. So now let's look at Facebook's cash flow statements, starting with its cash flow from operating activities. We're starting with its net income that reported on its income statement of $29.1 billion. We're adding back in its depreciation of $6.8 billion because it's a non-cash expense item, but it does look like its depreciation has been increasing over the past 3 years, which makes sense because we did see its operating margin decrease, and so this coincides with what we learned on the income statement. And we're also adding back in a sizable amount for its share-based compensation of $6.5 billion. We're subtracting $1.1 billion due to deferred income taxes. And then we're also going to include its changes in assets and liabilities. So like this $1.5 billion change in its accounts receivable. If we looked on the balance sheet, this would mean that its accounts receivable increased by $1.5 billion, which would be a decrease to its cash position. So this is taking those changes into account, but net, those changes shouldn't have a large impact on its final operating activities cash flow, which came to be about $38.7 billion. And now continuing down to its cash flows from investing activities, we can see that net, it invested $30 billion more into different various investments. So in total, it decreased its cash position by $1.3 billion, decreasing it from $19.2 to $17.9 billion. And this shows me that Facebook is a very profitable company, but it's choosing to keep most of its cash flow from operations on its balance sheet by reinvesting into either marketable securities or CapEx. Okay, so now that we've gone through Facebook's operations and financial statements, it's now time to use this information to decide upon a valuation method to get a fair value for Facebook stock. And since Facebook is such a prominent growth name and carries a high price to earnings multiple, I think looking at analyst expectations and using a discounted cash flow model is going to be the best option. And this is where I'll look at analyst expectations for future growth and use my own assumptions to get the cash flow that I think the business is going to return to an investor over the next couple years. And we can get a fair value for the stock by discounting those cash flows to the present. So this is my cash flow model for Facebook. Starting off with my assumptions at the top, I'm assuming a required rate of return of about 8%, which is very close to Facebook's weighted average cost of capital, which made me comfortable that this was a good assumption. And for the perpetual growth rate, I used 3%. I was tempted to put in higher, but since most analysts were using 3%, for the sake of being conservative, I just left it at 3%. And now for the first real assumption for Facebook's operations, its revenue from 2021 and 2022. There is a wide range of analyst expectations, but for the averages, they're mostly around 25 and 20%, respectively, for the next 2 years, which I thought those were reasonable assumptions. And I tapered down its growth going forward to 6%, because the next year it's basically, I want to assume that's going to grow at my perpetual growth rate of 3%. And then for its operating income, I got that by using its operating income margin, which I started at 38% in 2020, and I continued to taper that down just to be, again, conservative. And then from its operating income, I have a spreadsheet that helps me calculate basically the free cash flow that I think Facebook is going to return. And then I discount those cash flows to the present using the 8% annualized rate of return. And so from all these assumptions, I have enough information to get its net present value, which is including its terminal value, the discounted cash flows that I just calculated, and also I wanted to throw in its current cash on its balance sheet because that should be included in the net present value of the Facebook company. And if I divide that net present value by its current outstanding shares, I calculated a fair value of Facebook to be about $360 a share. And from its current share price of $301, that's about a 20% upside. And I think the reason why Facebook is still trading at such a discount to this calculated fair value, which is pretty close to a lot of analyst expectations, is because there's still so many risks revolving around Facebook's business model and also scrutiny when it comes to, more regulation and legislation. And for the sake of transparency, here are my positions in Facebook. My first purchase of the Facebook stock was in 2017 at $150 a share. In 2020, basically during COVID, I was able to purchase shares again at about $143 a share. And most recently, I made an additional purchase of 4 shares of Facebook for $301. This was just last week at the time I'm making this video, just because I feel like Facebook's risk reward is now appealing to me again. So I wanted to add a bit more to get a little bit more exposure. So currently my cost basis is about $5,900, or about $165 a share, and at its current share price of about $301 a share, this gives it a current value of $10,800, which is a gain of $4,890, which is an 82% unrealized gain on my current position. And if this stock trades down after earnings, depending on the numbers in the report, it might be a stock that I will be looking to invest more in. I hope you enjoyed my analysis on the Facebook stock. And remember to like this video and subscribe to my channel, especially if you're interested in other videos on stock analysis. And eventually I plan to release videos on my portfolio's performance each month. I want those videos to be informative, but also be transparent with what I own. It'll probably be an interesting week ahead with the stock market because a lot of companies are coming out with earnings and everyone's very interested at the numbers that they're going to post. But it's always important to remember that the stock market is a long-term game. This is Market Matt, and I wish everybody best of luck investing.